Welcome to another free credit control training course video. This is the Bookkeeping Master on YouTube. In our previous videos, I gave an introduction to credit control. We then looked at account applications and looked at an example of an account application form. The video after, I discussed letters of acceptance, accepting a credit application once we've been through a set number of steps that check the background and credit of the applicant. And now in this video we're going to look at creating the account and a few things that go with that. So let's look at our credit control spreadsheet so far. You may have credit control software, but the same information would be entered into the software. So we have the business and company information, the credit check procedure, so trade references, credit reference, signed, approved, approval letter. If this doesn't make sense to you, please watch the previous videos. And we then looked at credit information. So creating the credit account for a client or customer. First of all, before we have an active credit account, we need to ensure we have clear credit control procedures in place for chasing and collecting debts. So let me give you an example of a very basic credit control procedure. This is purely an example, and it can obviously be adjusted to business circumstances. But when chasing debts, the first thing to do is obviously phone, and we could also email copy invoices and a statement. At 7 days, if the debt has still not been paid, according to this procedure, we would phone the business again, make phone contact and post a reminder letter. At 14 days overdue, our procedure could state that we phone again and send another reminder letter. This reminder letter could be a bit more blunt, could refer to legal action and an account closure, whereas the 7 days overdue reminder letter could be a bit more soft and friendly. At 21 days overdue, we could put the account on hold, we could phone our debtor again and provide a letter saying the account is on hold or temporarily closed. At 28 days overdue, we would phone again and send a final reminder stating legal action if payment is not received. And then at 35 days overdue, we could then start legal action against the debtor. So that's an example of some very basic and clear credit control procedures of how to act when debt is certain days overdue. You could make the procedure a lot more specific than this, such as certain questions to ask when you phone. And obviously all these letters that you're sending would have some sort of template, so you're not having to write them out each time. So once we have a clear set of credit control procedures in place, we could open a credit account with a customer, and let's update our spreadsheet. I added payment terms under credit information from the last video. Your credit terms are likely to be the same with all your credit customers, but that's not always the case. You may find you have different payment terms for different customers, so that can be updated here. Now that the account is open with the credit customer, it's important that we make some notes, such as the contact in purchase ledger, the person we need to talk to ensure we get our funds, their direct number, their direct email address. You may want to make a note about pay runs. For example, a lot of bigger companies will have certain days of the week, every fortnight or every month, where they do a pay run. I've put in Tuesdays. If you're aware, when your customers do their pay run, you can call the day before, and this may increase the chance of receiving your funds in better time. I've put a row in for payment and I've put check. You may want to make a note about how your customer pays. One of the keys to good credit control is building a relationship with your debtors, especially your main contact. When you call them, if you can say something along the lines of, when will you be sending a check, or if they pay by backs, when will you be making the backs payment? That's a lot better than calling and just saying, when are you going to make payment? And then asking month in, month out, how's that payment going to be made? You may want to make a note of when the shutdown period is. Some businesses and companies have a shutdown, like over Christmas, over Easter. If you make a note of this, for two reasons. One, you can chase payments before they shut down and ensure you're paid up to date before the business shuts down. But also, you may be trying to get hold of someone while they're on shutdown and not know why you can't get hold of them. In the next video, I'm going to teach more about chasing debts and keeping a log of our debt chasing activities. This is the Bookkeeping Master on YouTube. Thank you again for watching.